Hey everyone, hopefully you're having a good day. My name's Andy, channel's Finding Value. Today we're going to rip through Twitter, see what people are sharing on social media. I'm going to interject my financial opinions as we go, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive in there, take a look, and see what people are sharing. If you want to follow me at Financial Finance, and if you want to join our community, finding-value.com is where I dive deeper into all of these topics. I can answer your questions face to face on a Zoom meeting. And I go deeper into individual companies for potential investments. We have a coupon code Mayday that is still active. So we've got energy headline news. Saudi direct burn rose by 93,000 barrels per day month on month and was up 11% year on year. And why does this matter? Because the internal demand for Saudi Arabia is going to go up, like we're seeing, and exportable capacity will decline if they don't increase production of Saudi Arabia. So as demand goes up throughout the world, exportable capacity shrinks if they cannot increase the production or supply of that country. That is something that everyone should be watching to see if exportable capacity is increasing or decreasing of oil. Logan, he says, the demand or people, they will rush to sell their overinflated homes. To do what? Sell to be homeless? Sell to buy another home? Sell their total cost to pay higher rent? This is why I say I never listen to traders about housing economics. People live in their homes as cost of shelter, not an asset. This is guys saying if people understand this, they will rush to sell their overinflated homes. Once they do, we'll have an epic collapse. In most markets, currently only 25% or less non-homeowner renters can afford to buy a house in their overinflated state. Mind-blowing. Yeah, these guys, my opinion, the more I read about the housing bears, the more that I envision about the more they demonstrate that they don't understand the market, in my opinion. It doesn't mean that if rates go down, something like that, and all these people think that we're in these big overinflated markets, um, go look at inflation. Go see what the options of the people are. I have a feeling that the majority of people are very similar to me. I am not going to sell my house whether interest rates go up or down because I don't want to pay 3 times the amount in rent. I pay literally 1/3 the rent price to live in my house that I purchased 8 years ago or whatever it is, and have a low cost. Why would I do that? I have a feeling that the majority of people that I know personally would not sell their house, go rent another house. They're not trying to make money from their home. At least I'm not. I just want low cost of living. That's all I want, and that's all I think everyone that I know that has purchased homes in the past 10 years, we just want low cost of living. We don't want to go rent a house for $3,000 or $4,000 a month. The cheaper stocks get, better I like to buy them. That is the mindset that you need to adopt as an investor. As the price of assets go down, you should want to buy more of them. Here's NARF, obviously sharing my talk with Casper. Go check it out. We've got Jay Parsons. To build more housing, we absolutely need to reform zoning and permitting entitlement process. But that's not why new multifamily construction starts are plunging toward 10 plus year lows. The big reason is that the math no longer works. Flat rents plus pricey debt equals few housing starts. That's his opinion there for multifamily apartment. Coming down to Dr. Leah. Yes, soft inflation print does not imply much for oil, where two feedback loops largely offset each other. One is fundamental, Weaker inflation equals lower rates, which equals lower USD, which equals higher oil prices. The other is flow. Weaker inflation equals less hedging demand. So here's oil, the positive reinforcement loop, emerging market growth, portfolio, inflation, oil. Then we've got positive inflation, positive rates, positive dollar, which is negative for oil. Two feedback loops that he's got there. So we've got a negative balancing feedback loop going in a figure eight. Maybe the figure eight goes that way. Where inflation is and where it isn't. So let's see where inflation is according to this chart. Auto, where the most amount of inflation located right now. Rent, and I just talked about rent. I know they say 4%, but my housing, mine's flat. Yes, there's maybe some costs with the house like insurance that are up a little bit or property taxes, but my property taxes really didn't go up that much. I'm pretty ecstatic about that. So I don't really have huge inflation costs with a flat mortgage and my property insurance going up a teeny bit, my home insurance going up a teeny bit. I just swapped insurance companies, so my increase in home insurance was zero. My auto insurance did go up a little bit. Restaurant meals, I don't really eat out all that much, but I do have food inflation for sure. Earnings, medical care, guys, that's crap. The costs for medical care has just gone through the roof. Let's look at some of the negative ones. Used vehicles are down 10%. Rental cars, toys, airfare, appliances, gasoline, electronics, new vehicles, those are all down. Just an FYI. Amy Nixon says a lot of people think home prices will go crazy again when the Fed starts cutting rates. This will only be true if they are token cuts and ultimately remain in a long-term tightening cycle. Where if we start making rapid cuts next year and swing back to an easing cycle, nope. Then she shows data of moderation, tightening, accommodating. I think that we're in an increasing interest rate environment. In the short term, we could get a pullback in rates, and I think rates will go back up. That's what I think. I don't think we're in a moderating cycle. If so, here's Steve. If a million doesn't buy you a kick-ass house, you're living in the wrong place. I mean, $1 million home here, I think is a decent house. I don't know if it's like over the top awesome house. I would say those are probably like 1.5 million. Now, here's another thing I want to make a comment about that. What I've noticed is obviously that as house prices go up, you're going to get a certain individual or type of person in some of these neighborhoods. So the neighborhood is ultimately, what's the minimum hurdle to get into the neighborhood? And what I found is I like living in neighborhoods that are above a certain portion. So when you make enough money and you live in a certain area, I like to live in that, the blue. It's not a blue collar really. There's some blue collars, but there's a lot of white collar type jobs. I like living in that kind of middle ground. I don't like living in the uppity area. I don't like living also in maybe a cheaper neighborhood where the school system, it's not really the school system, but the kids that go to the school system aren't as good of quality. So kind of like that engineering, lawyer, doctor, all those types of jobs. Maybe it's like people who work and do roofing or own their own business or, stuff like that. I want to be in one of those neighborhoods where those people are growing up and they instill the good um, ethics and stuff into their kids. And my kid will also be friends with those kids, which are an influence on my kid, not just me as a parent. So that's kind of what I try to shoot for. I wonder how many people are currently living that can drive stick shift. That's literally a dying breed. I have 4 cars right now that are stick shift and one automatic. Thought that was interesting. Who had foreclosures declining on their 2024 bingo card? Latest data from ATOM shows continued strength for the American homeowner. This is also why I think that we're in a mid-cycle wobble. You don't get to a mid-cycle wobble at low, very low foreclosure rates. The interest rates have gone up, home sales have declined, our housing starts have rolled over to some degree. We see an uninversion of the yield curve that's all screaming mid-cycle, all screaming mid-cycle wobble. Like we're at the end of this mid-cycle wobble. If that's the case, we are going to see home prices go up if interest rates go down. That would be my leading indicator. So if mortgage rates start to decline, we should see the housing market pick up a little bit at some point. That would be my guess. Last year, Google and Microsoft data centers consumed more electricity than many countries did, which is wild. Here's all the countries. This is Google and Microsoft. I think that we are going to squeeze the crap out of energy. I think electricity demand is going to go up quite a bit. I think we are going to have to build a lot of electricity infrastructure and power generation. I know some people think it's going to be uranium. I think it's going to be natural gas or coal. We're going to fire back up coal power plants and or produce more natural gas plants because of the short lead times. And then I think long-term nuclear will do well. But this is crazy. If a lot of these companies are going to start to just consume a ton of electricity, I don't see where all this electricity is going to come from in the short term. So I'm investing in an energy shortage for the most part. Luke Roman, interesting that the number of 1 billion plus US weather disasters only really broke out higher in 2008 after the Fed began QE post GFC. I imagine that at some point in Zimbabwe, high wind knocking a single tree onto a single home roof was probably a 1 billion Zim dollar natural disaster. Now, I was going to make a comment too, because I was looking at this chart. I'm like, guys, this is just inflation. You could have weather disasters be flat through all these years, and this is just your dollar going down. So this is just the inverse of the decline of the dollar. Finding or gold. So this is me myself. Gold doing gold things when the yield curve uninverts. Pretty simple. Buy in the circles and sell right after the peak in the blues. Easy looking backwards. And this is just these circles where you want to buy gold, you want to sell gold right after and switch into other assets that go up, maybe perhaps like oil or something like or something else, whatever it is. Those were the good buy points, and we are continuing to work our way on up for this uninversion of the yield curve. Investment wisdom. People who succeed in the stock market also accept periodic losses, setbacks, and unexpected occurrences. Calamitous drops do not scare them out of the game. That might be good information to know because maybe we do get a drop here if yield curve converts. Maybe it happens in the next 6 months or something. U.S. petroleum inventories in million of barrels. And here's something I want to talk about. So this is the EIA. Remember the big move, the big blow-off move in 2008? Well, this is my question to everyone that's a barrel counter. This is another question to all those that think inventories are the ultimate deciding factor of market movements. In 2008, we had inventory going up. I think it was SPR maybe buying a little bit, but we had inventory going up and the price went vertical during this time frame. At one point, or 1,700, we're basically below where we are in 2008 in terms of inventory of crude, refined products, and SPR. And we have way more demand today than what we did back in 2007 and 8. So my question is, if we've got lower inventory levels, how come the price of oil is not higher? Where's that? Our days of coverage are down. We're way down in terms of days of coverage. Why isn't our price way up then? What's going on? Maybe what matters is how money moves in the financial markets. And this is it's another factor, but it's not the main driving factor. That's what I think the case is. Here's another one. Met coal companies have some insane gains over a short period of time. While everyone was watching Nvidia, Alpha Metallurgical showing who is the real alpha is. Commodity bull market is going to be insane, and this is Alpha Metallurgical Resources 23,000% increase from 2020 to the peak 2024, and we've got a little bit of a pullback. This is Nvidia underneath it. So I know some people are like, well, you missed the NVIDIA train. I'm not in Alpha Metallurgical Resources, but this is something that I would definitely pair to because Alpha Metallurgical Resources has absolutely dominated NVIDIA and has probably dominated most everything. That there's other companies that are beating NVIDIA since 2020 that are commodity companies as well. Who is one to watch down here against support? Retest of the large breakout pattern. I agree with that. Test of that big breakout pattern. Crude oil hopefully can close strong today, close to a breakout. And there is right on that resistance trend line and trying to get a big move to the. Yeah. We also have on a longer term where we got a breakout here. I don't know if we're going to come back and do a retest before moving on higher, or if we're just going to go higher. And the reason I don't know that is because the uninversion of the yield curve, generally where we get a slowdown and people could get scared. We could get a selling pressure move, much like 2001. So we'll see what occurs. Money wisdom, all benefits in life come from compound interest, whether in money, relationships, love, health, activities, or habits. Compound. Opportunity here is just mind-blowing, and this is the Huey gold miners versus the semiconductors. We have a 17-year perfect bullish falling wedge saying historical global sector rotation, change of capital flows is in the making. Yes, that looks incredibly big, 5,000% difference from its peak. Here's Kevin Bambro. He says silver inventories could be depleted 2 years, 2 months, or 2 weeks. Ridiculous money creation has taken place. So little actual physical silver. Let the hoarding begin. And that is what I've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We've got a question and answer session coming up on Sunday, 5 p.m. Mountain Time. If you guys are interested in joining, love to see you guys there. That's all I've got for today. So we'll catch you next time. This is Finding Value.